All right, welcome to the jam session. I've got a great guest today. We're going to talk about industrial investing in Canada. And it's something that, we're trying to bring you guys new information and new markets. And I was very fortunate to run into Chad Griffiths. Chad's been in real estate in the Western Ontario area for 16 years. So he kind of knows the market well. And he's also an investor. So Chad, thank you for coming on today.
Hey, thanks so much for having me, Joe. A big fan of your channel, and I'm excited to talk anything and everything industrial real estate.
Yeah, I really think we can bring some value. I love the fact that we're able to come on and you can tell us what's going on up there, because here in California or around the United States, we're struggling with industrial. We need more assets. And I'm probably guessing you guys are pretty similar. But why don't you tell us a little bit now? You've been with NAI Capital. Have you been with NAI Capital for all 16 years?
Yeah, my whole career. I started originally in residential real estate. I did a year in 2004 and then moved over to NAI in 2005. And yeah, I've been there ever since.
That's impressive. Good company, by the way.
It is. Yeah. Thank you.
Some of the agents here we know very well, and they're top notch. All right. So you also own a portfolio of industrial. Can you kind of walk us through, how did you get started? I mean, what was your path to success in real estate investing in for industrial?
Yeah, and I still am an active broker to this day, but so I joined the industry in 2005. I was raising a family, so buying a house and cars and all that stuff took me some time to save up enough money to start investing in myself. But in 2014, a partner and I bought our first industrial property, small industrial condo, and we've pretty much added a property every year since. And just yesterday, we closed on a $4.1 million multi-tenant industrial building. And that takes our portfolio up to about 17 million. But we've got partners on that, and we've got debt on it, obviously, as well. But we're actively trying to add one property a year, and hopefully we can continue growing and developing that portfolio over time.
And now, do you syndicate your deals?
We haven't. No, we've set up a separate company for every single property that we've bought. So because we want to have our own capital in there as well. So we haven't gone along for a ride as a sponsor without any capital in it. We have all of our own money into this as well. But again, we've got other partners that have come into the corporation, and we have debt on it too. So it's a big number, and we have a fairly sizable portfolio now. But we have all of our own capital in it.
Man, you got into industrial at the right time, didn't you?
Well, yeah, it's funny. We're in a market that's similar to Texas and being really catering towards the oil and gas sector. So we started buying in 2014, right as oil peaked and started dropping, and we've continued to buy all the way along. And it's been pretty static over the last 7 years or so. But now, much like the US, it's starting to boom. We're starting to see a lot of tenant and buyer demand for industrial property. And I think that's what's interesting about industrial real estate is we could take our market in Canada, and we could take any city in Canada, and we could take any city in North America, and there's going to be a lot of similarities between an industrial property in my market and an industrial property in LA or Denver, call it, where you start getting some differences is just how hot the market is. Like your guys' industrial market right now is sub 1%. It's virtually impossible to even find good quality warehouse space in your market.
You're talking to know about the flood. Let me tell you, every day I need industrial.
And what do you say to them? Like, good luck. Like, we'll keep you on a list, and if something comes available, we'll send it to you. It's got sub 1%. You're effectively no vacancy.
Right.
Something comes available, and you're probably leasing it 6 months to a year in advance.
Yeah. It's super tight. Now, what is your vacancy rate up there?
We're about 6% right now, which is actually like I was talking to someone in Dallas the other day, and I think Dallas is probably one of the hottest markets in North America for new development right now. I think the number he said is there's like 40 million square feet under development for spec development right now. So Dallas is a really hot market, and they're about 6% as well. So that's actually a really good vacancy rate because there's still a few options available. It's a pretty balanced market, even though we're starting to see that tip where now it's starting to become a landlord market again. But call it 2013, 2014, we were about a 2% vacancy rate. That was when oil was over $100 a barrel.
Oh, yeah.
There's a lot of demand. but that's slowly increased. So even though 6% is a pretty balanced rate, going from 2% to 6% has that effect on tenants' minds, right? They think it's 20% now, when in reality it's still a pretty tight market.
Yeah. What kind of, I mean, do you go for value add? What kind of assets do you look for?
Everything that I've bought has been either a stabilized asset already, or it's
Okay.
close to being stabilized. I don't have the appetite to take on those value add properties just because of the risk that accompanies it. I kind of look at industrial real estate as a spectrum. On one end, you've got ground up development, and that's the most risky play that you can make in terms of
Yeah.
deploying capital and not having a certainty of your outcome. And at the other end, it's like a Fortune 500 or a government tenant that's leasing the space, and they're on a long-term lease. I like I like flirting more with that end of the spectrum. And I kind of look at those value add developments being on the other end where there's just a little bit more risk. And for my profile right now, I'm a very conservative investor. I just like getting cash flow. Hopefully you can get some top line rental growth from your tenants over time. Hopefully they can appreciate, hopefully you can pay down your mortgage. And given enough time, given like a 10, 20-year horizon, which I conceivably have, I think I'll fare pretty well on that. Whereas a
Okay.
lot of those value add guys are more in it for like a 5-year hold. I'm pretty patient. So I kind of look at it. I've got long-term money. I can be very conservative and I don't have to take those risks. But at some point, as the portfolio grows, it might be something that we look at.
Okay. What does your typical tenant look like?
I would say we've got a full spectrum. Actually, we bought one
Okay.
property last year, which was about a $3 million property, and we have a Fortune 1000 company in there, and it's a single tenant building, and they've got about 4 years left on their lease. And then we've got the one that we just closed on yesterday. We've got there's 7 tenants in there, and one of them's 4,000 square feet, and it's an automotive tenant, a local automotive tenant that could go out of business tomorrow for all we know,
Sure. Yeah.
if the market tanks. Knock on wood. So we've got the full spectrum from the small mom and pop company all the way up to a Fortune 1000 company. I think instead of almost looking at the tenant, I like to look at what's the underlying value of the asset. So if that property were to go vacant for whatever reason, so if that Fortune 1000 company doesn't renew their lease, or this small automotive company goes out of business, what are my chances of being able to release that at rates that they're currently paying right now? So I almost take a look on it that the tenant is nice because you definitely need to have some cash flow, but what's your worst case scenario if that tenant were to leave? And that's kind of how I look to hedge my downside risk
Yep.
before I even start looking at profit. Is worst case scenario, something happens, tenant fails or the tenant doesn't renew, what am I going to be able to release that property at, or even sell? So that I kind of look at the building first. That's the first thing that I'll do if I'm doing
Mhm.
any quick due diligence. And then you start analyzing the lease and doing a 5, 10, 20-year projection.
Sure. What are the things that I guess, we've got a lot of newer investors on this channel, Chad. So what are the top things you look for for your properties? What are the things? I mean, obviously, access has got to be number one with trucks. What else do you look for?
Yes, so I'd say first thing is you need to differentiate the different types of industrial real estate.
Mhm.
So in your market in Los Angeles, you're going to have a lot of those distribution type properties,
Yeah.
the warehousing, where the big trucks coming in and out, they need adequate access to get in. They're probably going to need loading doors, dock high loading doors. Whereas if you go to a market like Texas, and let's say you go to Midland, Texas, which is right in the oil industry, you're probably not going to have as many of the warehousing type buildings as you will have manufacturing type buildings. And those are just going to be different. It's probably grade loading. You're going to have drive-in access. You're probably going to have more power. You might have cranes in there. You might have more yard space, which is graveled and fenced, versus like a warehouse building, a distribution center. Like everybody's probably familiar with it right now if they've seen an Amazon fulfillment center. That's a really
Yeah.
clean industrial building versus
Yeah.
the manufacturing properties. So I would say first things first is you got to get a really thorough understanding of what industrial real estate is. And then equally important, get a thorough understanding of what it isn't, because a manufacturing property probably isn't conducive for a warehousing type of tenant and vice versa. So I really just try to get a solid understanding of everything that I'm buying, and then know who the tenant is going to be for that, or what broad type of tenant is going to go in there, and then also know what the limitations are. And I think that that's equally important as well, because if you were to buy a building, and this is, I think, like a really good example of a mistake that you could make. Let's say a building comes on the market and there's a tenant in there that's 3 years left in the building, and everything looks great. You check all the numbers, do a long-term projection on it, and it looks great. You hope that they renew, so you're comfortable going ahead with it, but you find out that there's only, call it 14-foot ceiling heights in there. Well, if it works for that tenant in there, you're fine so long as that tenant continues to pay their rent. But if they don't renew in 3 years, you might find that there's some functional obsolescence in that ceiling height where future tenants don't want to lease it. And if you have a hard time finding another tenant down the road, that could be a major problem. So I think how I try to look at it is, what type of property is it? Who's the type of tenant that I'm going to attract to that property? But also just check any blind spots that you might have. Like, how are future tenants going to look at this building, not just the current one? How are future tenants going to look at this, and what might not be competitive? Ceiling heights is a natural one, because you could appreciate that some tenants might want to put more racking, or they just need higher ceiling height for their operations. There's a number of reasons why they want higher ceiling height, but it could also be power, it could be access, like you mentioned, it can be the type of doors. There's so many of those blind spots that they're only blind if you don't look for them.
Right. Ventilation. Yeah.
Ventilation, absolutely. Like makeup air. There's sprinklers. That's another big one. And like, we've probably all heard stories of a company that was in a space, the next one comes in, and then all of a sudden you need a $200,000 sprinkler upgrade. So there's those blind spots, but only if you don't look for them. If you've got a team and you've got experts, you got a broker, an inspector, lawyer, accountant, banker, architect, that full team rounding it out, you can catch a lot of those things in advance, but you just don't want to cut corners on it.
Yeah. That's the thing, is you really want to do your due diligence before you buy. Now, you sure know a lot about all the industrial here in the United States. How do you know so much about the market? Do you have clients that are going back and forth?
I do. And I just follow it up pretty closely as well. The first thing that I do every morning is I'll read articles. So Globe Street is a great one that puts out a lot of information. I try to read brokerage reports when they put out their quarterly reports. I think that there's so much overlap between the markets, that what's happening in your market, even though it's not going to be the same as mine, there's going to be a lot of trends and similarities with it. So I diligently and intentionally follow the North American industrial market quite closely.
I can see that you know more than a lot of brokers down here now. So are you getting a lot of buyers from the US up there?
We are, and buyers and tenants. There's a lot both ways too. Like I talk to a lot of clients here that are interested in going to the States, and we have a lot of interest from the States. I think it's largely driven by opportunity. So if a buyer happens to come across a property in a market in Canada that they're interested in, they'll probably give it a close consideration. We're not seeing a lot of speculative buyers on either end, like where someone will just come up and say, hey, find me a property, I want to invest in your market. It's usually more property driven. So they're pursuing an existing opportunity. But yeah, we're seeing a lot of cross-border transactions right now.
Yeah, I can imagine. It just seems everybody's desperate for industrial, and you guys would be a good place to head to. Well, can you give us, I know we're running a little long on time, but can you give us some tips for a new investor in industrial? Give us 1 or 2 or 3 tips that you think they really need to be watching out for.
First thing that I would recommend to anybody looking to get into industrial is to actually go and physically drive the area that you're thinking of investing in. So if you're in LA, or if you're in Chicago or in Toronto, go spend a Saturday or a Sunday afternoon where it's quite quiet in these industrial parks, and drive up and down every street just to get a sense of what the market is. But there's a lot of companies that you'll never have heard of. There's millions and millions of square feet of property that you never even knew existed. So to just start broadening your horizons and opening yourself up to seeing how expansive the industrial market is just go physically drive it. And then once you've done that a few times and you become very familiar with what the market is, and you see things happening, you see signs going up and new companies moving in, and you've done that a handful of times, then just start diving into all the news. So reading Globe Street and BizNow and brokerage reports. I think that that's a really key thing. And then when you're ready to start building a team around you, get a broker, get a lawyer on your side, an accountant, any other professionals you think can help you guide you along that process. Don't try and do it on your own. I think that that's probably the most critical mistake somebody could make, is thinking that they can just read a book on this and then go start investing. I think that there's a linear
watch a YouTube
process.
video.
Yeah, one YouTube video. All right, it's
one
time
YouTube
to buy
video.
a
I got it.
Yeah.
No, I agree. And all you're saying is get educated. Get educated about your market, because the boots on the ground, you've got to know your market. We tell all of our agents to do that. You've got to know everything going on in your market. And, first of all, there's so much access to information anymore. Every tenant, every client, every property owner knows it, but boots on the ground are the key. All right, Chad, thank you very much for coming on today. If any of you want to get hold of Chad, I'm going to put his contact information down below. If you want to buy some property up in the western part of Canada, please reach out to him. And Chad, thank you for coming on today. I wish you the best of luck up there and continuing with the industrial assets. Well, thanks so much, Joe. Appreciate being on the channel again. And you might see me in LA if I have to put up with a few more snow days like this. So I might be quicker than I thought. We'll get a desk for you here in the office. You can sit here and work and for a while, or as long as you want, actually. So, all right. Well, if you haven't done so, folks, make sure you subscribe and make sure you like this video too. All right. Thank you, Chad. Thanks, Joe.